Welcome to the Jay Tyner Show, where we discuss all things wealth management and retirement planning. And as always, the goal of our team here at Semmax Financial Group is to help you focus more on your life and less on your money. Now, as a reminder, check with your current advisor, planner, CPA, and read our disclosure in the video description below. Subscribe to this channel if you want to stay up to date on all of our new content. And by the way, if you have questions or need a 15-minute free consultation, please visit semmax.com or call 336-856-0080.
Hey everybody, I'm Jeffrey Griffin along with Jay Tyner and Matt Landon, and today the topic, the most overlooked tax breaks for retirees. Now right off the bat, don't worry. Don't be intimidated. Don't be scared. This is a lot of numbers, but this is something that people address and handle and have a conversation about all the time.
Right.
And there's so many tax breaks out there that we got to break this up into two sections.
Because we don't want you to miss a tax break.
Okay.
I mean, if you can keep the money in home, right, then let's do that.
Absolutely.
So, Jay, you're going to get started. The big standard deduction sounds like a happy place to begin.
I think you need, first of all, let me say, you always need to take these deductions when you can, okay? So when you reach in your pocket, if you got some coins in there and you're walking down the road and you got a hole in your pocket, the coins are just falling out, right? What do? You need to get mom to kind of sew your pocket, or, I remember back in the day, it's like, I got a hole in my pocket. But anyways, all tax breaks or tax deductions in the IRS parlance, we say credits, exemptions, and deductions. Those are the three biggies, okay, in the tax talk, okay?
Right.
So let's talk a few numbers here. I think number one, right now, everybody gets a bigger deduction. So what you can deduct from paying taxes on has gone up. In other words, you can have less to pay taxes on. So here's your deduction. If you're married filing a joint return, you get about $25,100 that you can deduct from your income, and you pay taxes on the difference. Now, if you're over 65, I don't know if everybody knew this, but if you're over 65, you get an extra $1,700.
If you're single.
If you're single.
Yeah.
Right. If you're married, you get $2,700 for both spouses if you're both over 65.
Correct.
Now, I kind of confuse you with the math here, but basically you've got almost $28,000 that a married couple filing a joint return, both over age 65, can deduct from paying taxes on. That's a biggie, and that's your standard deduction.
Y'all are already batting 1,000.
Yeah.
I'm super pleased right off the bat. So what about spousal IRA contributions?
Right. So a lot of folks think, okay, all right, I've retired. My spouse is still working. I can no longer contribute to my 401k. Well, that's true, right? But if your spouse is still working, you can still do a spousal contribution into an IRA. Now, whether that's Roth money or IRA money, either or. So you could even be in a situation where if you're over the age of 50, then the contribution limit for the year is $7,000. So you could put $3,500 into an IRA and reduce your taxable income by $3,500. You could also put $3,500 into a Roth. So that's where you get that total of $7,000. You can do it different ways. And you're going, well, time out. I haven't worked this year. As long as your spouse has, you can kind of piggyback alongside. The government gives you a lot of benefits for being married. They really do.
Well, there are plenty of benefits.
Yeah.
So I'm all for that. But Jay, there's another big deduction that a lot of people just don't think of. It seems so matter of fact when it comes to Medicare. I mean, we all deal with it at some point, right?
Well, yeah, I think there's a unique little piece of the code that if you happen to fit in this category, if you're self-employed, say as a consultant, and in fact, we know a lot of people that they finish out their career, they go into retirement, and they say, hey, I want to become a consultant, all right? Mm-hmm. And you can actually deduct premiums that you pay for Medicare Part B and Part D, plus the cost of supplemental Medicare, that's the Medigap policies, or the cost of a Medicare Advantage plan. You guys can deduct that if you're a consultant or self-employed. So I just wanted to throw that out there.
I like that. I like what I'm hearing so far. Now, Matt, some people will say, well, it doesn't apply to me because I make so little, there's really nothing to do. But there is something to do.
There is. So there's actually a tax credit for low-income seniors.
Okay.
And what's interesting there is a tax credit is not the same thing as a deduction. Right? So a deduction is, this is less money I have to pay on. A tax credit is the government saying, here's some money that we're applying towards your bill. Now, here's the fun fact with this. With a tax credit, if you only owed I'm going to use really easy numbers here. Right. If you only owed $300, but you had a $500 tax credit, the government is going to send you back that $200. This is not a deduction. Okay. This is a credit. You're getting that back.
Again, this is for low-income seniors.
This is for low-income seniors, and it's really special to miss this because listen to this: the tax isn't even mentioned on the main tax form. On the 1040, it's not on the 1040. It's not on or on those schedules. And the 1040 form instructions, it only briefly mentions it one time.
So if you know, you know. If you don't know, you're out of luck.
It's almost like they're trying to hide it.
But they wouldn't do that.
They'd never.
No,
do
they
that.
wouldn't.
Absolutely not.
All right. So I got a double play ball.
Well, hang on, because there's a special schedule you have to fill out for this. Schedule R. R is in Romeo. Schedule R has to be filled out.
Correct.
So okay.
All right. Yeah. Well, you got to get your paperwork lined up. So double play ball. All right. Some people say, well, it's April. You got to file taxes. Got to pay my taxes. And then there might be one voice in the group that goes, I pay my taxes all the time. Mm-hmm. And you go, hey, you're just weird, but not necessarily so.
No, and that's the thing, because everybody thinks that the tax system here in the U.S. is kind of like a voluntary tax system. Well,
kind of, sort of.
Kind of, sort of. Let me say it this way. When you get to tax day, April 15th or April 17th, sometimes if it lands on a weekend, they move it to the next Monday, which is typically the 17th. Taxes are actually due as income is earned. So if you make money today, you actually owe the tax today. But Uncle Sam gives you the ability to kind of pay, like you were saying, a couple of different ways as you go. Now, here in America, if you're working, the biggest entities that are grabbing all this tax money is your employer. Right? Mm-hmm. They're taking out your paycheck and then they're passing it on. Every time you get a paycheck, we're passing that money along. We're passing that money along to Uncle Sam. So that's kind of standard for if you work for 37 years, you never really realize it. Then you go into retirement and maybe you have a little extra income coming in. Now you got to start filing maybe a quarterly
little
tax
more responsibility.
Return. It's back on you, right?
And the same thing with those withholdings, because it's not just for the paychecks. It is from the pension plan from work. It is from the 401k withholdings. Now, if you have an IRA, right? Now you can choose to withhold. But let's say you're in a situation where you're saying, hey, I don't really want to have this money withheld. My spouse is still working and they're withholding too much here. We're getting a huge tax bill back. I just don't want to take that money from my pension or my 401k. There's a special form that you have to fill out. You have to fill out a W-4P form in order to not have that withheld. Otherwise, they're automatically going to be taking those tax dollars out.
Okay. Good information. And folks, we are halfway through the most overlooked tax breaks for retirees. We're going to come back with part number 2. Lots of good information to come your way. So I'm Jeffrey Griffin for Jay Tyner, Matt Landon. We appreciate you, and we hope you subscribe to the Semmax Financial Group. If you have any questions, would like to learn more, visit us online at semmax.com or give us a call at 336-856-0080. Thanks for joining us, and see you next time. Bye.